Welcome back. You're watching our continuing coverage here from Davos 2023. I'm joined by Dinesh Kumar and Sanjiv Bajaj to talk about the lending environment and what the year holds. Mr. Khara, 2022 was a great year, not just for State Bank of India in particular, which was a particularly good year for you, but in general for banks. I want to understand from you as we look at the year ahead, do you expect to be able to replicate that kind of growth? Do you think that credit offtake will continue to hold at the levels that we're seeing?
Thank you very much for having us on your show. First and foremost, when it comes to the credit growth which we saw in the calendar year 22, that was on a relatively low base. So that's why perhaps about 20% plus kind of a growth was seen across the system. So when it comes to 23, of course, the base has gone up already, and that is one aspect. Then the second aspect is when it comes to the growth of the economy also, we expect that though this year we expect the growth to be around 7% for the financial year 22-23. But going forward, as far the IMF World Bank estimates are also concerned, it will be about 6% and odd. So if at all that is a kind of a situation, perhaps it will taper down a bit. May not be as much as, I would say that from 20-22%, it might come down to somewhere around 14 to 16% kind of a growth. That I'm saying because we see adequate opportunities for the industry to grow. And apart from that, two very important levers. One is the green finance, which is happening now. And the second is the EV, which is assuming a greater significance, and the system related to EV like the batteries, etc. All this also assuming greater significance. Consumer lending will continue to grow. Opportunities are emerging even in the agri sector. So we are quite hopeful that we'll get to see 14 to 16% kind of a growth even in the calendar year 23 and also in the financial year 23-24.
Okay, so base effect will play out as well as a slowing down as far as the economy is concerned. That will impact, but still high teens is what you're expecting. But on the private capex side, and the last conversation that you and I had, you said that you are seeing very clear, visible signs of private capex picking up. Since we last spoke, does that continue to hold, or are you seeing it build up further?
I would say that the trend which we are seeing is almost synonymous to what we saw last year. So almost about 70% of the new investment which is being committed is coming from the private sector. So if I may add in terms of the future opportunities which will emerge, both in terms of infrastructure creation as well as into the green energy initiatives, I think there will be there's a decent interest being shown by the private sector investors.
Can you quantify that?
Well, of course, in terms of quantification, in terms of percentage, I would say that the private investment was as high as about 70%. Until November, whatever trends we have seen, it is as high as about 67%. So I think that's a very, very promising number which we get to see.
Before I get Sanjeev into the conversation, I wanted to get your quick thoughts on the discussion paper that the Reserve Bank put out last night on moving to an expected loss model. And while, of course, this is still a discussion paper, we don't know when the implementation will take place. It's still a while away. What could the impact be? The expectation is that provisions will move higher on account of it.
Well, I think it is being evaluated, but nevertheless, what I would like to mention is at a system level, the provision coverage ratio in the banking system is actually 71% plus. So to that extent, I would rather say that banks are quite cognizant in terms of the credit risk which they are observing in their books, and they have started providing for that kind of a credit risk quite proactively. So I think I don't expect that it will have a significant impact, but I think it is too premature for me to comment on the likely numbers. But maybe eventually I think if at all IFRS has to come, this is something which will be one of the foundation stone for that to really happen.
So we will have to move to it.
Yes.
Well, Sanjiv Bajaj, let me ask you about sentiment at this point in time. You're very clear. You believe that consumer sentiment continues to be strong. It's holding. But as Mr. Khara pointed out, some impact of the base effect as well as the possibility of things slowing down a little bit. What is the market telling you at this point in time? What's the pulse check?
Agree with everything with what Dinesh just talked about. You will see clearly the base effect with lower GDP growth in the first 2 quarters of the new year. But hopefully by third, fourth quarter, things should start swinging back. clearly we are seeing on the consumer side growth in the rural space. Urban space is a bit choppy. We see a few good months and then a few flattish months as well. It's encouraging that the government continues with the government capex. I think that's provided tremendous wind beneath the wings for the consumer, because he or she earns, and they end up spending as well. And as we also talking about private sector capex, so we are seeing this in construction, we are seeing it in chemicals, we are seeing it in sectors like steel, in new energy. Industry is, of course, in a period of uncertainty, and capital has to earn a particular return. That's why you don't see it as aggressively as we would have expected to by now, because across multiple sectors, people or companies are at a level where they need to reinvest. So I think it's only a matter of time before we see that. And yes, as we keep talking about it, and that times always gets pushed out a year ahead, but those are the kind of volatile times we are living in. And while you didn't ask me that question, I can tell you that large NBFCs like us have already switched over to ECL a few years ago.
Okay. And did you have to provide more?
In our case, we did not, because we were very conservative even with the earlier provisioning methodology. So we did not need to. It takes some time to get used to this new method of calculating losses. But I think the learnings in this case from the large NBFCs should help smoothen it out as far as the central bank is concerned for banks as well.
Okay. Mr. Khara, we've got, of course, the budget coming up, and the expectation is that there will be more measures that the government will announce to try and stimulate growth. What's your expectation as far as the budget goes, and also, more importantly, the kind of changes that we are now seeing with the UPI, the NPCI announcing more measures? How do you see that trajectory moving forward?
I think when it comes to budget, of course, savings, I think, needs to be encouraged in the economy, and particularly the kind of growth rate which we are envisaging, which is essentially about, from the current level about 6%, we need to go up to about 8%. So to promote the savings, I think there would be, we expect that if at all there could be some relief from the taxation point of view as far as the interest income is concerned on the deposit. That will probably go a long way in terms of supporting the economy as well. The loss of the exchequer may not be much, but I think from the point of view of the economic growth and the consequences in terms of the GST inflows going up will probably compensate for that. That would be the expectation from the banking system. And the second expectation would be that though as SME becomes one of the very important constituent, so what all can be done for the SME would be, in fact, I would expect that if at all the CGTMSE kind of a guarantee can be improved upon, that will also go a long way in terms of giving the confidence to the banking system for supporting the SMEs. I think these are the two factors which I would expect that if at all there could be some announcement, this will probably shore up the confidence of the system into very two critical sectors of the economy.
Okay. Interest rates. You believe that we're likely to see the MPC pause in light of what we've seen coming from the Fed, as well as where inflation is? Do you still hold that expectation that we are going to see a pause?
It would be either pause, or we expect that it might go up by another 25 basis points and thereafter it might pause. This is what my expectation is.
Sanjiv Bajaj?
I would say the same. I would say that 25 bips is where I think we end up peaking, and inflation is starting to come under control. Again, some base effect there as well. And thereafter, as MPC has always said and RBI has said, that they are guided by what they see happening around. So naturally what happens in the West will play a role. But currently, from everything one knows, I would say that yes, one more small rate hike and then we pause.
Let me end by asking the two of you, we talked about the potential for further growth. What do you see as the single biggest risk at this point in time to business for you?
Okay, that's a tough question. I think it's really external situation, because if you've seen the last year, our exports have grown. They've started slowing down. Luckily, they've only flattened out for the last reported monthly numbers. We are seeing the domestic economy pick up. We are also going into an election year. I hope the government's focus on economic growth continues. It has in the past, but we have to see that happening. We have to keep growth going at this point of time. till externally things get more balanced.
Mr. Khara?
Well, I think my thought is that the kind of resilience which we have seen in the past from many of the unknowns which the economy has faced, that actually gives us the confidence, probably whatever be the negative thought which might come in the mind, we have got the capability to get over that.
Negative thought is one thing, negative event is another thing. What negative event do you anticipate, if
so
any?
Even if the negative event also happens, what we have actually seen in last about 3 years' time, pandemic nobody had thought of, but the way we have got over pandemic, I think it is something which is a case study for the world at large. So I think that gives us the confidence that we will probably, whatever might come, we should be in a position to get over that.
Well, Mr. Khara and Sanjiv, many thanks for joining us here on CNBC-TV18 in Davos. Appreciate your time and we wish you both the very best of luck. Well, we will take a break here and our conversations continue on Davos 2023. Don't go anywhere. We're back in a minute with more.